and a very warm welcome to Realty Buzz, your window to the real estate sector. I am Mansee Dave. In today's episode, we're bringing an exclusive report on offshore investors for realty funds. Firms look to tap offshore investors for realty funds. The development comes despite their sobering experience with such funds in the recent past. Let's take a look at it in detail. A clutch of private equity firms plan to raise $3 billion from overseas investors this fiscal year to create dedicated funds that invest in local real estate projects, despite their sobering experience with such funds in the recent past. Housing Development Finance Corporation Limited, HDFC, is planning two new offshore funds, a $500 million fund through HDFC Property Fund and an $850 million fund through another entity. Four more. Indiabulls Asset Management Company Limited, IDFC Alternative Limited, IIFL Group and Piramal Fund Management Private Limited are in various stages of preparation and discussions to launch similar funds to raise $250 to $350 million each. Financial services firm IIFL Group, which is the last leg of raising its rupees 1,000 crore domestic fund, IIFL Real Estate Fund Series 2 plans to launch a new offshore fund that will invest in residential projects and will primarily do debt transactions. Private equity funds that invest in real estate projects may opt for equity investments which carry higher risk and returns, debt investments with low but guaranteed returns, or structured transactions which are a mix of the both. Investors' appetite for equity is very less and they are very cautious too. Real estate developers shut out of bank lending amid weak sales and poor cash flows typically secure to large chunk of their funding requirements from external pools such as a real estate fund. However, for the real estate funds, raising money is easier said than done. Out of the target of $500 million for its last fund, HDFC Property Fund could raise only about $370 million. That too after trying for nearly 2 years. Its new $500 million fund to be launched sometime later this year will make both debts and deals and equity investments equal. HDFC is also raising an $850 million fund which will invest in affordable and mid-income projects. Apollo Global Management LIC will shortly start raising around $700 million from global investors to make fresh investment in India and China. Many real estate funds that raised offshore capital in 2006-07 have struggled to return money to investors. Domestic funds such as the Ask Property Investment Advisors Private Limited and Piramal Fund Management Private Limited, which are in the process of raising fund capital, have also faced challenges. Ask Property, for example, has raised $50 million of its $200 million fund and hopes to achieve a final closure by early next year. Investor interest is back for India, but they have not started issuing commitments. On the other hand, if we talk about funds, fundraising is tough because limited partners are not enthused about investing in India. Regulatory laws are changing with exit considerations becoming uncertain. Some global funds look to invest directly in projects while some others form exclusive partnership platforms with Indian developers and investors. Canada Pension Plan Investment Board has partnered Piramal Enterprises Limited for a $500 million debt fund and struck an alliance with developer Shapoorji Pallonji Group with an initial commitment of $200 million. An affiliate company of the Government of Singapore Investment Corporation Limited (GIC) and Bangalore-based realty firm Brigade Enterprises Limited will invest rupees 1,500 crore in residential projects in South India. Separately, GIC and Ascendus Property Fund Trustee Limited will invest around rupees $600 million in commercial office space projects in India. In May, investment bank Goldman Sachs and Bangalore-based realty firm Nitesh Estates Limited said they will invest $250 million in income-generating commercial assets. This kind of a partnership platform allows you to scale up. For a first-generation company like ours, it helps us grow with global capital, said Nitesh Shetty, Chairman and Managing Director of Nitesh Estates. Investors' interest may be returning because of the way the government has projected India as an investment destination. But funds will continue to battle a tough fundraising scene, said analysts. Domestic fund may have a great track record, but they also need a good LP, limited partner network. So here we take a short break. You don't go anywhere. We will be right back. Stay tuned. Real estate funds and developers like Blackstone, RMZ and Raheja are in a rush to buy commercial real estate to cash in on the attractive price today and benefit from the rise in rental and capital values in 2 years. Welcome back after the break, the next news on board says office space absorption rises 32% in top cities to face supply crunch. Rising office space take-up is seen as an indicator of the improving health of an economy and usually followed, albeit with a lag, by the improvement of home sales. In what may seem a relief to property developers, office space absorption in the country's top 8 cities rose 32% to 17.9 million square feet in the first 6 months of 2015. According to property consultancy Cushman & Wakefield, new office space addition also posted a handsome gain, jumping 20% to 21 million square feet. Mr. Sanjay Dutt, Executive MD South Asia at Cushman & Wakefield, said the recovery in home sales will take another 2 to 3 years. The middle and low income housing will surely recover in another 2 to 3 years, but the premium or luxury segment will take much longer to recover, he said. According to Mr. Dutt, every 100 square feet of office space absorbed will result in 800 square feet of residential space being taken up. The surge in demand for office space can be attributed to the regained expansion momentum, mainly in the IT, ITES and e-commerce sectors. Bangalore, as usual, led the office space absorption chart with 174% year-on-year growth in the first half of 2015, followed by Pune at 162%. But Delhi NCR recorded a 38% decline in half-yearly net absorption over 2014. Other big markets such as Ahmedabad and Hyderabad too noted a sizable decline in net absorption of 59% and 19% respectively. The overall vacancy shrunk to 18.5% in the first half this year from 20.5% during the same period last year. Robust demand amidst increasing occupier interest for expansion as well as consolidations and relocation of premium office spaces, mostly grade A developments, caused absolute decline in vacancy by 3 percentage points over the same period last year. The office space demand had reached its peak of 40 million square feet in 2008, which fell to 25 million square feet in 2011. But for the past 2 years, there has been a marginal growth in demand. If we talk about the commercial real estate market, it has seen a sudden rise in demand recently. Real estate funds and developers like Blackstone, RMZ and Raheja are in a rush to buy commercial real estate to cash in on the attractive price today and benefit from the rise in rental and capital values in 2 years. Devaluation of rupee is another positive factor for the commercial real estate market. About 80% of office demand in India is by the outsourcing industry, and any devaluation in rupee is going to make the services cheaper and help the industry grow, thereby boosting the office space demand. The office market is expected to see a total of 36.4 million square feet of absorption by the end of this year across the top 8 cities, an increase of 18% in comparison with 2014, while the new completions are expected to touch about 43 million square feet, of which about 42% of this supply has already come in by Q2 2015. The overall supply is expected to increase by 24% over the last year. In terms of office space in Kolkata is likely to see a 5-fold rise compared with 2014. Pune will witness over twice the supply of 2014 and Chennai a 26% increase. All cities except Hyderabad and Mumbai will see positive growth in supply in 2015. So on this note, we come to an end of this episode of Realty Buzz. Keep sending us your suggestions and views at contact us at optimusmedia.com or call us at 91-922-92288 or 1800-3000-5191. I'll be back with more news and more buzz. Till then, keep watching Spin TV. Goodbye and take care.